Hi ladies and gents, welcome back. This is video number 41, but number 3 of module 3. Right, in this particular video we're going to discuss, all the videos from now on really should I say, in module 3 we're going to show you some combinations of how to use one signal with one indicator and using another indicator with it as well. Alright, okay, so open up a blank chart, maybe something like this, okay, and then what you would want to do is go ahead and apply. Let's just remove that off of there, and let's remove that off of there. What you would want to do is go ahead and find the oscillator and the accumulation distribution, and your colors, just to follow along really, should be the value should be green, and then I've chosen the second thickness grade there, and then the value down red, and the levels and the visualization is okay, so you can go ahead and plonk one of those onto the chart. And the next one you want to put on there is the accumulation distribution. Alright, and this will give you basically just a red single line. Levels and visualization is all just fine. Alright, now you may recall, or maybe not recall, in video number 19 of module 2, I mentioned that there was going to be a bitrace signal coming up pretty soon due to the way that the AD indicator was set up. Alright, and if you recall, this is where the breakout was. Alright, let's take that pen there. So here is where the breakout appeared. Alright, and the breakout appeared right there, which coincidentally was also a part of a double bottom. Alright, what we need to do is take our line tool, we need to get another line tool out, okay, and bring this down. Alright, then what we're looking for is, let me just step back a couple of moments. The best way to actually get into a trade is by having a set of rules. 1. Identify the trend. 2. Identify the signal. 3. Find a confirmation. Very, very, very important. Find the trend, find the signal, find the confirmation. Okay? Find the trend. We found the trend, it's down at the moment. Alright? Find the signal. There's the signal, breakout. Alright, this particular strategy we're using here is part of a breakout strategy. Okay? Breakout. Alright, so once we have found 1, the downtrend, 2, the signal, 3, the confirmation. See that bar right there? It's a green bar. Alright, just because it breaks out of there does not necessarily mean that you should go long on the trade. You could, you still might have some success out of it, but for the most part you might not. Okay, so it's always good to have a secondary indicator on your chart, alright, and then see how it performs. And this one here is a green bar, and then we go long on the next one. So we would get in somewhere on that bar. Alright, let me just clear some of that off the chart, and let's just scroll back a little bit. Okay, and here is what the first bottom that we had. Alright, let's come back over the bottom, and this one did penetrate the bottom a little bit, so let's just zoom out a little bit more so we can see some more information. And here is another bottom. Okay, another support level. And that one didn't actually hit. We've got some more around here as well. And that was almost pretty close. So we're all doing okay for support and resistance levels. Now let's see if we can find another area in the market that we can use to predict a move one way or the other. Alright, okay, so let's just remove these out of the way for the time being, and let's go ahead and grab another our trend line tool out, and what we're looking to do is to find the accumulation distribution and place them on the highs. Alright, now if you don't know what the highs are, these are like highs here. Okay, and the reason why they're highs is because this one is higher than that one, this one is higher than that one and that one, and this one is higher than that one and that one and that one, and so forth and so on and so on. So that these are highs. Alright, there's a high, but this one is actually a higher low, and then a higher low, and so forth, and then it breaks right here. Alright, so let's get our we need to get another trend line tool out, but I can't really do this, so I'm just going to go ahead and guesstimate. Boom, somewhere like that. Oh, let's just go ahead and take that off. I didn't want really to take that off, I wanted to show you the other way. Okay, and we're looking for the break. I need to rearrange this one because it's not perfect. It needs to be on that line. Alright, and just see where that one breaks. That breaks around about there, so that's fine. Okay, so we've identified the trend. It's down. Alright, that's number one. We need to find the trigger, which is right there. It's an alert to get in, and we can see that indeed it does break. And then we need the confirmation. So this one down here is number 2, and then this one here will be number 3. And we see green bars above the vertical scale. So that one works out well. Alright, so where do we place our stop loss and where do we place our take profits? I don't like to sound paranoid, but for the most part I believe that brokers do hunt you out. Okay, so what I tend to do when I'm doing my day trading is that I will only put my stop loss value in once my trade has made a sufficient amount of pips. This is also another very important reason why I use higher time frames. Alright, because the smaller the time frames that you use, the more chances you're going to have your stop loss hit, because the market is moving in a very wild manner on lower time frames, so it seems. Okay, so you want to go to a higher time frame. Alright, and to try and get some more confidence from yourself when you're doing your trading, because again, this is another essential element of trading as well. Successful trading is to be confident in yourself. Alright, it's not to second guess yourself, and if you're second guessing yourself, it's probably because you're not confident or you haven't understood the steps carefully. And if that is what you're experiencing, then you need to say to yourself, what is it that I'm not understanding? What is it that I'm not really confident in? Then try and see if you can go back. Like for instance, you might turn around and say, well, I think I might have this set up correctly, but I'm not sure whether I should go in on here. That's a doubt. Okay, you're not confident in what it is that you're learning. Okay, so you need to sort of kick yourself up the bum, alright, and say, oh, I was right. Okay, that's great. And then go ahead and place a trade. Now, just go ahead and do it on like a demo account. So you don't have to go live. Alright, do this on a demo account. Please be free on a demo account. Do anything you like. Try and see if you can break it. Alright, seriously. Yeah, do whatever you can. Alright, and then get the hang of things and see how you go, and then go and use like a micro account at FX Open or something like that. Okay, and yeah, and then play with like $1 or $10 inside your account just to get used to trading with live money. And then once you start building up your experience, maybe put another $100 in and trade one lot. And then if you're doing quite well for a couple of months, go ahead and maybe put another $100 in and start trading at two lots or something like that. Alright, take it slowly and move yourself up in each steps. And trust me, over a period of time you will do so well, alright? Especially when I'm there helping you out, alright? And especially when you're asking questions to ask me to help you out, alright? Okay, so here is, alright, so there we go, we've just found our signal, alright? So that's great. Alright, so let's go ahead and wipe that off, and you can see where we can actually go ahead and place our stop loss and take profit values. Can you guess where we can put our stop loss values in and our take profit levels? If you guessed anywhere around here, when it breaks, and see where the market hit, if you guessed to have that as your TP, congratulations. Okay, if you use this area here as your stop loss, then congratulations, you got that right. Okay, alright, let's see if we can find some more signals. Okay, so as the market's going along, it's adjusting itself, so what you can do is go ahead and readjust this line. Alright, and then when you readjust that line, you need to go ahead and readjust this one. Always take note that when I place this trend line on that peak there, it's because I'm lining it up with that peak as best as I can. And the same with this one. You see that little area there, and it lines up right there. Then it breaks right here, and it also breaks right there, and then so we've got our trend. This is 1, 2, our trigger, alright, and 3, our confirmation. Now our confirmation is right there, and we've got green bars above the vertical scale, so we can go long. Now, do we go long on that breakout straight away? No. Why? Remember, one of the first rules of trading is never, 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 never take a buy trade when you're directly under a resistance level. When the resistance level breaks, yes, you can go long. Alright, now you see that this particular bar here is a very long green bar. There's huge sentiment behind that bar to let you know that this resistance has now been broken. Okay, and when you see the market go sideways like it's doing here, it's like a little consolidation area. Alright, when the market consolidates, what's going to happen is it's going to keep going up. Trust me. Alright, and then it will go sideways again because it's gone up a little bit more, and now it's gone sideways, and then it goes up again. It comes back to try and correct itself a little bit, goes sideways, and then it goes up again even more. Alright, this is like the Elliott wave analysis, which I don't really know too much about, but I know a little bit about it. Alright, and Elliott wave analysis is really, really complicated. So I take the best parts out of the Elliott wave analysis to give myself an understanding on consolidation areas. Okay, and then we'll get into that into later videos. Alright, let's see if we can show you some short trades. Alright, so you can understand for the most part how to do both. Okay, we take it from a low to the very next low. Let's just say, well, okay, we want to scoop it along there. There we go. And then what you want to do is take out another trendline tool out, and you want to take it from there all the way over to there. So now we have this area right here, which is that section right there. We've got a little bit of an area that didn't actually touch, but this one touched, and that's that point right there. Okay, so that's great. We then see a break right here. We also see a break right here. Alright, and also it's very important, we need to make sure that we aren't on any support and resistance levels. Well, here is an area right there that lets you know that we are on a support level right there. Alright, here we've had some highs, and if we draw a line from there, we can see that the break appears right on that resistance level. That's a resistance, This is the support. The price is up here. It's coming down. It breaks through resistance. Alright? And when it's broken through resistance, the good target would be to target the support, but we also allow for a human error as well. Okay? And if that is my projected target, then I'm going to go, well, okay, maybe I should come up a little bit more. Alright, and use that as my TP target. Okay, so let's go have a look. Okay, we've identified the trend. It was going up, and we're looking for a reversal, a breakout. Okay, so we've got 1, the trend, 2, the the trigger, and then we've got the confirmation, which is here. You see where these red bars are below the vertical scale. So that's number 3, and that works out well, and then we can go short. Alright, so give that a try, ladies and gentlemen, and I will see you very soon in the next video. Bye for now.